Well, it certainly looks like the cracks in this rally are starting to show. I love one. It's red with reddragonleo.com, and today is Wednesday, March the 2nd. I said in yesterday's video that I thought we would go up to that 1320, maybe 1325 area, and we didn't do that today. There still is a possibility we can do that tomorrow. No guarantees on it. This market is looking extremely weak, and I think that the most we could get is right here where these moving averages hit, that where they meet right there, the 10 and the 20. They're meeting right there at 1320, ironically. So that is what you call a necktie of resistance. Whenever you see two moving averages cross each other and the market is ready to hit those, when the market hits those, it's double the resistance. So unless something miraculous happens tomorrow and the jobs initial claims are just fantastic and the market is actually stupid enough to believe it after all the lies the government has told, which I doubt the market's going to believe it, I fully expect it to get slammed down if it gets up that high and hits 1320. Now, depending upon how long it takes to get there will depend upon whether or not the market will, or whether or not tomorrow will actually close positive or negative. If it happens early on in the morning and then starts to roll over late into the day, it's very possible that it could put in a topping tail there and actually close negative and close down. And certainly going into Friday, with the non-farm payrolls, I think there will be some people selling until the close in fear, even if it takes all day to get up there to that level, which I don't think that it's going to take all day to get up there to that level. I think it's going to do it from the first few hours. By midday, I think it'll be up there and rolling over. And I say that based here on the 60-minute chart. You can see the 60-minute chart finally did hook back up. You can see that it spent most of the day down here. I said that it could continue down a little bit before it turned back up, although I thought it would turn back up a little earlier than what it did, but essentially it did not. But now it is looking like it's ready to turn up. I do expect it to come up here tomorrow, get overbought in the first few hours, put in a small histogram tower, not a lot, less than one I suspect, but regardless of how much it is, after it does that, I expect it to roll over. So essentially we're having this an A wave up, a B wave down, a C wave. If you look at these MACD moving average lines here, compare them to the histogram bars and stuff like that. So basically, I don't expect it to break this overhead resistance actually. So I think it's going to roll up there and hit that, maybe that 2.5 right in that range, and roll over. So I know this looks like a bear flag, but it's still got lots of support right here in this channel that is drawn right here. So the fact that it did not break it today, and it had the reason to do, obviously, because it, when it opened, it was selling down. It was right in this range right in here. It was still pointing down at the time. So it could have continued down if it wanted to break that line, but it did not. I do think we're going to go back up. Now, you can barely see this right here on this 60, but let's look at it here on the 30. Maybe you can see a little better. It's kind of a weak looking M, but if you go up like this, down here in the middle, it's a weak looking M, but usually it goes a little bit lower for the center of the M, then back up and then back down. You can call that an M. It's kind of funny looking one, but in any case, then you go up here for the A, the left side of the A, and then down for the right side of the A. The right side of the A should take this out and go down an equal distance of this line right here at minimum, bare minimum. Can go a lot further. That's called an MA pattern. And so that's a very bearish pattern. It supports the charts as well. It supports this being, again, this 1320 is a magical area. Look, if you look right here, you draw a line right through here, right to here, and where does it take you to? 1320. What is that on the daily chart? That is your necktie right there where the gray, light gray, and light blue lines meet. Your necktie of resistance, 1320. That is going to be your spot most likely. So I expect it to go up to that line, bang on this trend line, which is resistance, bang on the 10 and 20-day moving average, which is your necktie of resistance, and get slapped back down and then roll over. And as it rolls over, I don't think it can make it all day without rolling over. I'd be surprised if it makes it all day. I think it's just going to get that early morning pop for the first hour or two at tops, and then roll over into the close, and I think it'll take out this trend line. And once it takes out this trend line, it's going to hit this 1300, try to stay, but I think there's going to be some selling. And once it takes this out, it's going to be pretty bad, obviously. And then going into Friday, who knows? I really don't know on the downside how low it's going to go. Obviously, there's support here at 1275, but if those non-farm payrolls, if they actually tell the truth. Remember, the government manipulates all these numbers to get what they want. So if they want the market to crash, all they got to do is just tell the truth on the numbers. That's it. Just put out the real numbers. When they want the market to rally, of course, they lie and say the numbers are great and that we're actually hiring people, and the unemployment isn't 25%. It's only 9% or some crap like that. The real numbers are like 17 or 18%, I believe, of real unemployment, and then you throw in the people that have got part-time jobs right now that want full-time work. I think it's probably up in 20 or 25% right now. It's higher than you think. So, but I think that 17% is based upon what they are not reporting as to when somebody doesn't have a job but their benefits run out. So they're excluding those, and they do publish that. So I think Ron Walker publishes that sometimes on his chart, but the real unemployment numbers. And so anyway, all that doesn't matter. So what we're looking for here, as you can see, this is a triangle coming to a head. You got a line here drawing down to here. You've got support right here. It's going to come to a head tomorrow. It's going to bang on it. It's either going to bust out and go on up, very, very bullish, and continue up in this channel, or it's going to break down and break down on the triangle. That is what we're looking for. We're looking at this triangle. Draw a line there, draw a line here, and you're going to hit it, 1320, and that should be the last shorting opportunity, I believe, before another big leg down. Of course, a lot of you are already short, so just hang on. I do not expect this to be a big up day here to blow us out like it has been in the past. I just went over here to Cobra's chart and read, and he caught on to that as well. He posted it here on his blog. He circled, what happened before when we had a day like this after a big sell-off, and we had a big rally day the next day. It happened there, and I don't think it's going to happen again. He circled it here, down here, one time, two times that it's happened. This time, what he's talking about right here is, see how these candles continuously went up. And same thing here with this. You had a little bit of a selling back, but it continuously went up. This one did not. It went up, struggled, then had a big sell-off right there. Then went back up, had a sell-off. Went back up, and had a sell-off. So he's saying basically the tape is a lot weaker. And I'm in total agreement with Cobra there. I think that when it goes up here tomorrow to that 132 or 1320 area, which would be 132 something here. Just look for the 1320 area and look for those moving averages. Once it hits it, I think it's coming back down. And we either close slightly positive, slightly negative, or who knows, maybe even heavily negative. But if it does, rest assured that is a down move in 2 sideways days. If it just does a spinning top kind of pattern, or slightly up or slightly down, regardless if it goes up there and puts in a topping tail and closes somewhere in that area, That is a bear flag, folks. One down and 2 across. There's no limit to how many you can go. Obviously, if you went 4 or 5 across, it would probably fail. If you were able to hold it for 4 or 5 across and not fall, then likelihood would be it would finally reverse back up. But generally speaking, it's you can't really, I couldn't really tell you a certain amount of days that it takes for a bear flag to play out, because it all depends upon what day of the week it is, what's going on in the economy. But you got to realize that if we put in one of those days tomorrow, we're going into Friday. Friday is not likely to be a spinning top day to put in a third one when the charts are going to roll over, as you can clearly see on this 60. By the end of the day or midpoint of the day, this thing is going to be topped and ready to roll over for another move down. So, and then with the triangle pattern, the way it's coming to a head, it has to break down somewhere. So the odds of it putting in a third day sideways and not breaking down are very, very slim. It has to, because once this triangle pattern is broken, either to the upside or downside, it has to either rally hard or it has to break down hard. And the charts are bearish. This is the bottom line. By the time this happens, it's going to be up here and rolling over. How do you run it up that way? They had the opportunity to run it up today. They did not. It was very weak today, even with all the POMO money in there. So this tells you that the trend is changing. We are looking at a possible crash on Friday now, a mini crash, 400 or 500 points down. It very well could happen. It certainly could easily be another red candle like this, if not more. So just keep that in mind, depending upon what tomorrow does. The only way that that we could avoid the market really tanking hard on Friday is for this red candle right here to be taken out tomorrow. So that means the market's got to go up, get through that resistance there at the necktie, bust through that there, bust through the downward sloping trend line here. So it's got to bust through that, and then it's got to go up here and take out this high at 1320 something. What is it? No, 1333. I'm sorry, 1333.09. If it takes out that high and closes up higher, then you could probably safely say that this sell-off seems to be down for now, or over with for now, and there won't be no crash on Friday. So I don't see that happening. I don't see it busting through this necktie of resistance. I definitely don't see it busting out of this, because I just don't think it's going to happen. Obviously I've been wrong before, but in this manipulated market, but everything says that it won't do it, right now. And so same thing here on the 30. Draw that line down through there, and where do you hear? You had 1320. I think if they could gap it up above 1320, then they could run with it. But they've got to gap it up above, because they got to get above that resistance. So that's your key to look for. If you see a gap above 1320, then they're going to run it. They're going to run it up higher, and they're going to bang on this trend line, probably put in a new high and all this. But if it does not gap up above it to where it significantly moves up, then I don't think it's got a chance. And right now, in the after hours, I think it's about flat, up a little bit. Okay, two points or something. So 15-minute chart, of course, is also putting downward pressure on it. As you can see, it's up here, kind of overbought on the MACDs. Now, it's not overbought here. As you can see, it is moving up to the 0 line. So as this continues to move up, if it moves up here to +2, then that could stay up here until it finally rolls over. That could also, again, give this the move up that we're looking for to go in that 1320 area. Draw a line again right here, cross these tops, cross right down here. You've got around 1320. Give or take a little bit, but right around 1320 looks to be the major point of resistance. I think that that is it, and that would push this up a little, and that would maybe allow this to go up here in maybe as high as +2. And after that, I think we're going down. So I don't think this is a B, and a C move coming at this point. I clearly think that this was a wave 1. This is a wave 2 that's completed, and we are now starting a wave 3. And this is wave 1 down inside the wave 3. We are chopping around with wave 2 right now. And it'll go up a little bit tomorrow. Then we're going to have a wave 3 down on Friday, probably along inside of this larger wave 3 that's here. So if you can see this being a large wave 3 down to here, and then this is a 1, a 2, and a 3 inside it. So we're going to have a 3 of a 3, I think, on Friday. This is what's looking at to happen. And then, of course, I don't know about next week, but I do know that it's starting to get ugly right now. This is very, very bearish. And, you know, besides the funny-looking MA, but it is kind of an MA, which, again, supports it. So all these patterns together, it's working out with Elliott wave, it's working out with triangles, it's working out with MA patterns, it's working out with the histogram bars. Well, the histogram bars moving up, and the MACD's rolling up. It's supporting the full stochastics moving up. All the charts are saying that we're going to go to 1320, find resistance, get banged down, roll over into the close, and possibly take this out. And who knows where we close? Maybe 1300. If they try to hold on to 1300, maybe they hit a double bottom at 1294. But either way, it leaves Friday open for a pretty big sell-off. So that's what the odds say. That's what everything right now is supporting this bearish case. I cannot see anything bullish about this unless they gap it above 1320 in the morning. That's the only way I can see them succeeding. If they just open flat or slightly up or slightly down, I see it struggling in the morning until it hits 1320, and that's it. You can also look here at the RSI. Is now relative strength index is now hitting 50, and it's below it. It's 49.24. It's the first time that's happened in a while. It went up here, hit it first, and bounced back up, and now it's under it. So when we start going down there below 50, especially when you go below 30, you know, this is getting in bear territory. As you can see, the bull territory has it's worn out its welcome, to say the least. So you know, and so same thing here. You know, this down move that supported these two moves up right here. If you'll notice, the RSI at that point was not below 50. It was about 52 or something on that big red candle. And then the next day it went up. And then the next day it gapped open and ran hard and closed above that. That's another reason that I don't believe that will happen this time around, because of the pattern's different. We're below 50 now, even if it is a little bit. We also have these crossing moving averages with the 10 and the 20 crossing, making the necktie. We didn't have that there. We were still moving up. We've also already had one leg down, one leg up, and we're starting a third leg down, which, you know, should obviously go down in this fashion, a big wave 3. So that's just showing all the kinds of weakness. Everything is showing weakness, as well as in this pattern right here as well. You can clearly see when we were down here, it was not sloped down at all, hardly any. It barely dipped down here and then recycled, went right back up. This is clearly going down, putting in some lower towers. Here it just barely went below. So there's all kinds of reasons to support it. And then we barely dipped down to here on that. Look where we are now. We are below 50 on the full stochastics. Below 50. And here we are on the slow stochastics. We're just hovering above it. But look where it was on that other sell-off. That just shows you the differences in those other sell-offs where it had the 2-day recovery after the big red candle. Because this was the big red candle back in February that Cobra was talking about on his blog. So this time is definitely has the highest odds right now of exactly what I said, a crash on Friday. Although I thought we'd go up today, more than we did. It just shows the tape is weaker. So I think, again, we're going to pop up, and that's the max we'll hit. And then I think it's going to sell off to the close, and I don't know where it's going to close, positive or negative. But I expect a topping tail of some sort there. And if it closes just right around the same spot, look out Friday, because that's a bear flag, of 2 days down to going into the weekend. So that's it, gang. Discuss was down today as well on everybody's site, not just on my site. I was going over to Anna's site, Hot Option Babe and X Trends. I was bouncing around. I was looking around. Discuss was going down. So just if you see that happen, just keep refreshing your page. They'll eventually get it back up, I guess, eventually. So, I can't think of anything else. So I'll just close with this, and I will see you guys tomorrow. And if you're not already short, this will probably be your last opportunity right around tomorrow, midday or early in the morning, whenever it makes it to that 1320 area. Good luck, everyone, and hang on for the ride of your life. See ya.